Hey guys, Zoe here from OneGlanceTrader.com, and in today's video I'm going to continue with the video series of the divergence trading system. Now, in this video we're going to be particularly talking about when to take a divergence signal, so when to enter the trade. Now, I'm using a previous example that I've shown in my previous videos because I think it illustrates the different types of entry methods quite nicely. So as you can see that there are three different ways that I like to enter a divergence signal, and I'll give you what my favorite is at the end, but they are effectively a trendline break, a price action confirmation, and either or an oscillator signal. So you could have all three if you really wanted to. You'd probably get fewer trades if you did that. My view is that either pick your best or a combination of them all, just to get your way into trying using divergence. Probably when you're starting out, you may want to only take trades that have all three, so then you know that you're trying to pick the best probability outcomes here. So the first one, trendline break. So before I go into that, just for those who have just landed on this video, have not gone through this previous example, this is an example of bearish divergence. So where price is making higher highs and the oscillator, in this case the momentum, is making lower lows. So it's a disagreement between price and the oscillator, which has resulted in bearish divergence and therefore a change in trend. So, like I said before, is okay, great, we've got a divergence signal. When do we start entering and start placing our trades? So the first one is a trend line break. So quite simply, all you do is draw a trend line, if I can pick the right tool, over there. And that's about it really. So I personally will draw a trend line, but I don't personally use it because I feel a trend line is quite subjective. To what it is. Some people like to use the body. Some people likes to use the wicks and trying to get the points. If you want a crash course in trend lines, my view is as closest to the bodies as possible and 3 multiple touches. And therefore, in this scenario, you can see that the break in trend was on the close of this candle here. You would enter here, and then the trade sells off. So that's the first one with the trend line break. This one here is a pretty good example. If when you start looking at divergences, and you see trend lines, they're not as clean as this one, so that's why I tend not to use a trend line break. But if there is a clear trend and you see divergence, by all means, make sure you draw it. The second one is a price action confirmation. So those who know the work that I like to do in terms of building indicators, I'm known for the price action indicator, which you could get, clicking the link below. It's free, or just head over to oneglancetrader.com, and you can actually see here that it creates a bearish engulfing bar. So bearish engulfing is where a candle engulfs the previous candles or a range of candles, and as you can see, it's a fairly big engulfing bar. It's the biggest bar for probably until this bar here, so quite a few while ago. So the bigger the bar, the more candle it engulfs, the higher probability that price will reverse or continue in the direction of the engulfing bar. So what is good for this example is that the engulfing bar appears as well as the trend line break. So you've kind of got two confirmations in one bar, which is great. So therefore, then you would then take the trade as normal there. And then the third one is an oscillator signal, and I'll be honest, this is my favorite signal, because you're not always going to get a price action confirmation. So I will always have my OGT price action indicator on the chart, and if this develops and then the oscillator then shows the signal around here somewhere, great, fantastic, that's added to the confirmation. But you're not always going to get it, and you do miss some very good trades by doing that. So that is why I do like the oscillator signal, and also with the oscillators, it kind of gets you in a bit later, which, okay, in some cases isn't great because you could potentially miss the main move. However, most of the time it does kind of, does continue going down. But obviously you've got stops and your risk management to protect you if the worst goes wrong. So I've got two oscillators here. So there's two ways you can do it. The first way is using the momentum, and when price breaks through the 0 line or the 100 line in the default setting of the momentum indicator. You sometimes get custom indicators with momentum with the 0 line. If you're using the standard MT4 momentum indicator, just draw a level at 100. And as you can see there, similar to the first two signals or entries, that it happens on the close of this bar. So you've actually got 1, 2, 3 confirmations on this one bar where break off trend, bearish engulfing, breaks through the 0 line, boom. There you go. So that is probably the best textbook example I can probably give you of how to enter a divergent signal. So the other way of doing it, and I'll be honest, I do prefer this one. So on the MACD is when the histogram changes to the opposite side. So in this case, we've got a bullish histogram that we're in an uptrend. As soon as it changes across, as you can see, the value is now minus 0.000136. Which bar is that? That's this bar here, and then you do your entry. Now, in terms of your risk, you can either do it right at the high or above these bars here. Again, you know, entry exit setup, sorry, are quite personal to the trader. I will at some point go into exit setups on this channel, but for now, focus really on the entry setups and a trading strategy to get you guys going. So that's pretty much about it, really. So they're the three ways. Again, I do prefer the oscillator one. And in theory, in this case, you've actually got 1, 2, and 3 again, but the third one happens a bit later on. So you could say that this one is probably the more aggressive break, change in trend, where this is probably the more conservative because you've got the trend line break and you've also got the momentum crossing the 0 line. The reason why I prefer the MACD as my favorite oscillator in terms of when it changes from an uptrend to a downtrend is what I found is when price is in a really strong trend and you see so many divergences but it still continues to trend, the MACD still stays with the trend, and when it eventually reverses it will then change across. So that is why I do prefer the MACD, because it's a bit more of a later signal, but it does take you out of really strong trends, what I found. Yes, it gets you into the odd trend where it does retrace, it does blip, and then it goes back in the opposite direction again. That's going to happen with any system or any type of indicator that you use. But for the majority of it, very strong trends where divergence breaks down, it breaks down on very strong trends, is the MACD kind of saves you from it, whereas the momentum is a bit more reactive to the price action, and therefore it will tend to go below 100 or above 100 inside a strong trend with short retracements. So I hope you found that useful. Again, if you've got a different way to enter divergent signals, please put it in the comments below, and I shall see you on the next video.